Hey guys, it's JC. I wanted to do a video today. This is something we used to do a lot, like in 2012, 2013.
Isn't that what technical analysis is, like a representation of that kind of behavior?
It's a broken stock. That hasn't changed. I think what we're seeing after hours just confirms that. I don't think it's a surprise.
JC Parets All-Star Charts.
I want to see if we can get back to that. So we're not going to do anything too fancy here. We're just going to, as you can tell, this is our new office. We've been here for almost 3 years already, believe it or not. So I'm excited to kind of show you guys a little bit. And we're going to keep it simple today. I just want to talk about consumer discretionaries. You know, this is really one of the most important sectors in America and therefore the world, obviously. And consumer discretionary really just represents where we spend our discretionary income as consumers, right? Things like Amazon, big component, 25%. Obviously, things like home builders, other retailers, automobiles, things of that nature. But really, the bottom line is we look at it as a leading indicator. You know, if you're a long-only mutual fund manager and you think that the stock market is going to go up, the way that you're going to outperform the market and get that bonus, right, generate that alpha, is to overweight consumer discretionaries relative to consumer staples. And that process really takes time, as opposed to if you're a long-only manager and you think that the market is going to go lower, the way that you outperform, the way you generate that alpha is to be overweight staples, particularly relative to consumer discretionaries. You know, even if the economy's bad, we're still going to smoke cigarettes and drink beers and, you know, brush our teeth and wash our dishes. That's not going to change. So watching the consumer discretionaries and staples is really important. So today, let's just focus on the discretionaries, and just to rewind a little bit, why it is that it's so important. The truth is, it's really been a great leading indicator. When the S&P 500 made a new high in 2013, finally exceeding those 2007 highs, those epic peaks, consumer discretionaries had already taken out those highs in early 2012, in fact. So way ahead of the rest of the overall market. And now here we are today in July, and consumer discretionaries once again breaking out to new all-time highs. So we are looking at that once again as a leading indicator for the overall market. And as you can see in this chart, they really do move together. If discretionaries are going higher, it's really difficult for the S&P 500 to go lower. So I think we're going to see somewhat of a phase of catch-up here. And then just very simply, if you want to be long consumer discretionaries, Amazon has been a great trade, no doubt about it. But if you want to diversify a little bit more, get things like Home Depot and Netflix and other stocks in there as well, I like the XLY Consumer Discretionary ETF. If it's above 105, I see no reason not to be long. I think it goes to 128. Guys, if you have any questions at all, make sure to email us, info@allstarcharts.com, and follow me on Twitter, StockTwits, and Instagram @allstarcharts.